Well, Marc Ostwald is Chief Economist and Global Strategist at ADM Investor Services International. Marc, I've been dying to talk to you about this all day. We've got a lot to get through. So let's start with trade. When Trump's line has always been America first. He says that's about creating jobs. But what will his policies really mean for the consumers and for economic growth?
Well, in terms of the tariffs, if implemented as he said, which is not necessarily guaranteed, that will also depend to some extent on what happens with the House vote, whether the Republicans retain control of that. It would be inflationary. This never works the other way around. It doesn't really. At the end of the day, the goods are cheaper elsewhere, and all you do is basically create an opportunity to manufacture goods at home, but because the manufacturing costs are that much higher, so the goods prices go up, to basically match the sort of levels that are on the imported prices. So it's inflationary. In terms of broader implications, obviously, tariffs, I'm not so sure, actually, that China is the biggest victim of tariffs in this particular scenario. Simply because Europe is the one which is being squeezed the most at the moment. Europe is the one which needs the most help, and Europe is the one which will probably find itself labouring under the biggest problems,
yes,
if basically there is a 10% across the board tariff increase on Europe, as will of course Mexico and Canada, which will create a lot more trade tensions than there already are. So in terms of economic growth, I don't actually see this as being a particularly strong positive for economic growth, particularly as some parts of the Inflation Reduction Act and the CHIPS Act, which may be rescinded, that's the stated intention of the Republican Party, actually might create a bit of a fiscal cliff, yeah, for funding of the manufacturing sector, which has done very well under the Biden administration.
So what happens with the Inflation Reduction Act could be quite crucial for Europe's economy. I mean, if those tariffs are all implemented, and Goldman Sachs saying it could send euro-dollar 10% lower, we're already seeing the dollar rising. So you're saying undecided, but this isn't good for Europe.
It is certainly not good for Europe. I think actually we've got a very unusual day. If you actually have a look at the differential between US 5-year yields and German 5-year yields, you've got the first time in since the global financial crisis that German yields have dropped by more than 5 basis points and US ones have risen by 10.
Wow.
And given that the GFC was unusual, but that assumes basically that a slower growth will drive a faster pace of ECB rate cuts, and at the same time the US Federal Reserve will be much more cautious in cutting rates. I don't think necessarily that the ECB will be looking at a weaker euro-dollar as anything other than an inflationary threat.
I want to talk about the US Federal Reserve very, very quickly, Marc, because, America's central bank is independent of government. They pride themselves on that. But Trump said in his campaign he wants more of a say. I mean, what are the implications of this presidential term for the stability of the global financial system and dollar dominance?
Yeah, well, that is a very good question. I think in terms of the Federal Reserve, there will be a lot of concern about to what extent he wants to intervene. He refined some of his messaging on the Federal Reserve and just said, we want to be able to sit at the table and give our input, which is essentially what happens in Japan. But it probably also means that he will replace Mr. Powell as Fed chairman, which creates another line of uncertainty. But I think in general terms, it probably, for tomorrow, certainly the Federal Reserve will want to be reserving a lot of judgment. It's looking at where markets are priced rates. There's a 25 basis point cut discounted. What the key point in all of this is what it plans to do going forward, and there will be some messaging there about what it sees, but above all in the context of that much stronger than expected GDP number that we had last week.